Hello again and welcome back to Fast CPAs and Consultants. As usual, here we are with our CPA, Fulton Abraham Sanchez. Good evening, Fulton, and welcome back to our Tax Talk series.
Thank you, Monica, for hosting the video. Thank you.
Please. And you may remember in this video series, we are talking about the different tax strategies that you must follow according to your situation. And we will answer the questions received through our social networks. In this one, we are talking about the FBAR, which was divided into two parts. So now we are ready to continue with the second part. Fulton, shall we start?
Yes.
Okay, here we go. First question, how can I avoid FBAR penalties?
The only way to avoid FBAR penalties is to file every year and to file on time. You do not, even if you want to leave this to last minute, April 15 is the date. You make sure that you are filing this at April 15. There is an extension. The problem is that if you want to really avoid penalties, you file on time. One. Second, you need to reveal every single holding in a bank account in a foreign institution. Either this account is for cash or this account is for trading on stocks from a foreign institution. I said before in a previous video, we had a client. He was living in Europe, and because interest is very low in the whole developed world, clients decide to invest in Panama, for example. Panama pays good returns. There are other countries in Latin America also. There is one country that uses the dollar and pays very good interest, like Ecuador. But this client particularly invested in Panama, and he was getting good return. The problem is that if this client is living in Europe, and he is a US citizen, and he has holdings in Panama, he will have to report whatever kind of deposits he's holding in that bank account in Panama. This could be a time deposit, this could be a cash account balance, this could be a trading from a bank, a Panamanian bank doing trading from Panama into the US market, into the US and Wall Street. But this is the nature of the reporting. You need to have all the documents, collect all the documentation from the bank, because if the US Treasury or the IRS ask you for proof me the balances that you are reporting, you need to provide the bank statements for every single balance that you are reporting. So make sure you have all those documents in a safe place. Save it to Dropbox, to Drive, put it a secure password, two-step verification, but make sure that your documents are in the cloud and you have them handy.
All right. Well, yeah, so we should be extremely careful. So next one, what is the due date for FinCEN Form 114 FBAR?
The due date is April 15, but there is an automatic extension. The automatic extension is October 15. But I will suggest you don't have to file any extension. You don't have to do anything. You only need to file the document. But as a way of assurance for you not to delay the documentation, try to do it in April. For example, set up a date June 15. You don't go to August. You don't go to September. June 15 is the date. Let's say many expats, the IRS requires that expats get an automatic extension from the IRS to June 15. So you file your tax return June 15. File your FBAR as well. Form 114 is the number of the form of the US Treasury. That is 100. If FBAR is the name of the law, Form 114 is the number of the form that you need to use and send electronically, with the objective of filing your tax return, your FBAR. But again, if you are an expat and you have to file your return with the IRS June 15, use the same date as a due date for not only for the tax return, but also for the FBAR and file it on that date.
Understood. Also, there is another question related to Form 114. Is Form 114 extended to FBAR?
Yes, but it's only extended for the year, meaning that the due date is April 15 every year, and the automatic extension 6 months, October 15. We have to remember that in the US, October 15 is also the due date for the personal returns when you have filed an extension. So as a last resource, if you are filing your return in October 15 because you did file an extension before April 15, use the same date to file also the FBAR for 114. Now, what happened if you didn't file in previous years? The IRS has a program. The IRS has created a program called the Streamline Program exclusively for expats, US citizens and US residents who are living outside of the US for many years, and they didn't know of these filing obligations. The IRS has created a program, the Streamline Program, with the objective of every taxpayer, US citizen or resident, even outside of the US as an expat, coming into account with the IRS. But you have to file at least 6 years of FBAR. At the same time, if you have not filed your tax return because you didn't know, you have no idea that you have to comply with this obligation of FBAR filing or US tax return filing, you have to file, in addition to the 6 years of FBAR under the Streamline Program created by the IRS, you also need to file 3 last years of tax return and pay taxes, interest, and penalties. Now, remember, you do not pay taxes on FBAR, Form 114. There is no taxes paid. That is only an informational return. But if you are an expat, and a US expat, and you didn't know, have no idea that you have to file tax return and report your holdings in foreign banks, then the Streamline Program is for you if you want to come into account with the IRS. You have to file 6 years of FBAR. There is no penalties for FBAR. There is no taxes because you didn't know you have to file. But if you are going to use the Streamline Program, you will have to file 3 years of taxes, 3 last years of taxes. And if you have a foreign income different from the salary as an employee, earned as an employee, and you did have income, you have to pay taxes, penalties, and interest on that income if you want to come into terms with the IRS.
Understood. That is good. That I mean, there are like some exceptions for tax law when people, I mean, for people who doesn't know about filing, right? Because in the last video you also mentioned that it wasn't that strong.
If you have earned income as an employee, as an US expat employed in a foreign country by a foreign company, and this foreign company in the foreign country where you reside is contributing to the Social Security in that country, you are exempt up to $110,000 of income. That is your exemption. If you work as an employee, you file your taxes in that country, or even if you don't file it, but you make $110,000 in that country, when you come here to use a Streamline Program, you will use that foreign earned income exclusion. The objective with that foreign earned income exclusion is that the IRS is assuming that you are paying taxes in the other country. That's why he is giving you a break. But that is only up to $110,000. Once $110,000 your earnings, your salary goes over, then the portion, as we said before in a previous video, the portion over $110,000 is taxed at the rates of that portion.
Understood. Perfect. Thank you. And the next question, also related to this form, is what is the difference between Form 114 FBAR and Form 8938 FATCA?
Okay, those are the two famous acronyms from the IRS and the US Treasury that everyone is freaking about, everyone. As we said before, FBAR is foreign banking account reporting. That is the FBAR. And the objective of FBAR is reporting of bank accounts only. Bank account, cash accounts, trading accounts, accounts that you hold in a bank. If you have bank accounts that even CDs, even if you hold a CD in a bank account, you have to report that because that is a bank account. This is a time deposit. But that is FBAR. For every holding that you have in a bank, only in banks over $10,000. Remember, as we said before, and we want to stress this many times because clients and taxpayers believe that because all your accounts that you have are less than $10,000, you don't have to report it. No. If you have several accounts and the balances or the addition of those balances are over 10,000, you have to report every single account regardless of the balance. That is FBAR. FBAR pertains only to banks. FATCA is something else. FATCA is larger. FATCA is all of the rest assets, regardless if you have them in a bank or not. That is FATCA. FATCA is, the requirement of FATCA is with the IRS. The requirement of FBAR is with the US Treasury. That's why US Treasury is only cash. The Treasury is only cash. The Treasury only holds cash. Cash in banks, cash in time deposits is only cash. FATCA is anything else. For example, with the question that here says that, do I have to report, in the previous video, do I have to report an insurance, a life insurance policy? In FBAR, no. But in FATCA, yes, you have to report it in FATCA if you have the foreign insurance policy the insurance policy in a foreign country. You have to report the cash residual value of the policy for FATCA. What else you need to report in FATCA? Okay. Also, the limit in FATCA is not $10,000. The limit in FATCA is $50,000 for US citizens living in the US. US citizens living in the US, single is $50,000. US citizens living in the US, married filing jointly is $100,000. That is only for US citizens, FATCA living in the US. For US citizens not living in the US, expats, US expats, the limit doubles. It goes to $200,000 for singles and $400,000 for married filing jointly, for couples when they are married and reporting jointly. And this is specifically designed for US expats. They don't have to go by the regular limit of $50,000, but for $400,000. This gives a break to many US expats with a need, they need not to report to the IRS because FATCA is with the IRS, Form 8938. They need not report to the IRS if their holdings. What kind of holdings? Insurance policy, gold in a bank, in a security holding in a bank, in a security box in a bank. Retirement accounts in a foreign country, Social Security in a foreign country, any kind of 401k or retirement accounts in a foreign country, US expat will not need report unless the balance is $200,000 or for singles or $400,000 for couples. So FATCA doesn't affect to many expats unless, for example, you have a company. That's something else. If you have a company in a foreign country and the company and you hold the titles of the company, and the titles of the company are over $200,000 if you're single, or $400,000 if you are married filing jointly, you have to report those belongings, those stocks, those positions that you have in that company to the IRS in Form 8938. So this is the difference for FATCA. FBAR is only bank accounts. FATCA is anything else, any kind of assets that you have, anything you have to report to the IRS in this time, to the IRS. This involves, as I said before, gold that you hold, gold, jewelry, anything that you hold in a security box in a bank, if you have retirement accounts, if you have holdings in a company, if you have
insurance,
any kind of assets, if you have real estate, anything that is not bank accounts, go to Form 8938, and that is reporting to the IRS together with your individual tax return. This goes attached to your individual tax return. We've done reports of almost 100 pages for US citizens who live in a foreign country. They have made it good in that country. They have large companies. They have holdings in the US. They have bank accounts in the foreign country. They have bank accounts. They have real estate in the foreign country. All that needs to be reported in the Form 8938. And the return keeps growing and growing and increasing the number of pages that sometimes go into 70 and 80 pages. We've seen returns that large. I know there are returns larger, but we've seen returns almost 100 pages.
All right. All right. Thank you. So we have like two teams, FBAR and FATCA, both extremely important, but both different from each other.
Completely different.
Okay.
Yes.
Great. Thank you, Fulton. And here we have the last question, but also like really important. Can you talk about delinquent FBAR and FATCA?
Yes, delinquent FBAR. There is a resource that you can use if you have delinquent FBAR. If you have not filed FBAR for any reason, because you didn't know, you will be able to use a streamlined program, but you will need to file 6 years of FBAR. You pay no taxes because FBAR pays no taxes. FBAR is to the US Treasury. So you have that option if they have FBAR delinquent. If you have not filed willfully, meaning that you didn't file because you didn't want to file, and the IRS finds out, that's when things get hot, because you will need to file immediately and be subject to the penalties that the IRS is going to impose. And this is $10,000 per account per year. So if you are in the position and the problem with this is that before, the taxpayers in the US used to have another program, Offshore Voluntary Disclosure Program, but that was closed in 2018. So you don't have the option of using that program. The problem now for US expat, US citizens and US residents who hold account, who are holding accounts in other countries and they are hiding those holdings, is that you will get charged criminally. You can get even a conviction because you are not filing. You are not coming into terms with the US Treasury. You need to file every year with the objective of coming into terms with the IRS. This is the problem with delinquent FBAR. Delinquent FBAR will create $10,000 per year per account. So if you are a US expat and you can prove that you have lived for many years in the other country and you have resided for many years and you didn't know that you have to file FBAR, you can the streamline program is very good use for you. You can use that program and take advantage of that, providing that you are a US expat. In the case of FATCA, FATCA has a similar penalty, $10,000, but that is per form. So you have to be very, very aware of how many forms you file with the IRS in the previous years if you missed 1 year. If you miss 1 year and that form and you continue to file the next year, the following year, and you miss 1 year, you will get a penalty of $10,000. Now, if you have not received a letter from the IRS and you realize that you have not filed FATCA Form 8938, you can amend your tax return, and the amendment will prevent you from getting penalized because you are proactively filing before the IRS finds out. That is the key. If the IRS finds out that you didn't file and receive a letter, there is no way to require a forgiveness of the penalty unless you have reasonable cause. This is what reasonable cause comes to the picture. And this applies to both penalty for FBAR and penalty for FATCA. You have to tell to the IRS that you have reasonable cause. What is reasonable cause? Reasonable cause is that there was an earthquake, there was a storm, was a hurricane, that you were in the hospital for 4 months, that something happened to you, that you get a flood. Those are the only reasons the IRS, medical reasons and God-made reasons, that the IRS will accept for the reasonable cause for the forgiveness of penalty for both the FBAR and FATCA. But if you have no proof, there is no way. For example, the IRS, there was a blackout in Texas in this year. The IRS declared that a federal emergency zone. If during that time you were not able to file FBAR or FATCA because of the blackouts in your state, and the IRS and the government declared that as a federal disaster area, then you have reasonable cause, because the government has declared that as an emergency. But if you don't have that kind of reasonable cause, reasonable cause for an excuse or for an abatement of penalties, there is no forgiveness, and you will be assessed $10,000 of penalty for FBAR per account and $10,000 for FATCA per form filed.
That's crystal clear, Fulton. Thank you. And in case anybody has any other doubt, of course, I imagine there might be several. Remember, you can write it down in the comments. And once again, thank you, Fulton, for this detailed and helpful information. Really, thank you for your time. And also thank you for joining us. Of course, thank you again to our CPA, Fulton, for his knowledge and time. And please, everybody, remember, we are going to make more videos where we talk about the different tax strategies that you must follow according to your situation. You can check on our channel also the different topics we have already explained. And in case you have further doubts, please do not hesitate to send us an email or write it down in the comments. You can also follow us on our social networks, like in Facebook, where we have an exclusive group. And you have the link also of this group in the description of this video. And of course, be sure to subscribe to our channel so you can be notified when we publish a new video about taxes. Thank you again, and see you in the next video. Thank you, Fulton. See you later.
Thank you, Monica. Thank you, everyone.
Bye-bye.
Bye.